Hey there, everybody. My name is Kyle McIntosh, and I am a lecturer in the School of Management. I teach accounting and finance to our undergraduate students. Today, what I'm here to talk to you about is investment analysis during the pandemic and how investors sometimes needed to take non-traditional measures or non-traditional approaches to analyzing investments during the pandemic. So that is what I'm going to be speaking about today, and I hope you enjoy my presentation. Before I talk about investment analysis, though, I'm going to tell you a love story. Okay, so you might be thinking to yourself, this is a story about how Professor McIntosh met his wife in Australia. You also might be thinking that this is a story about his golden doodle that he always talks to his students about, or it could even be a story about his two children, ages 14 and 11. They're a little bit younger in these pictures, but ages 14 and 11, and I'm always talking about them too. But if you thought that, you would be wrong. Okay, this is not a love story as we usually tell them. Instead, this is a story about a stock. Okay, and it's a stock called with a ticker symbol of CLDT, which is Chatham Lodging Trust. And it's a stock that I fell in love with during the 10 years before the pandemic. And actually going into the pandemic, it became my biggest stock holding. Okay, so let me tell you a little bit about Chatham Lodging Trust and the impact of the pandemic on that company. So first off, Chatham is an investor. It's a real estate investment trust, and it invests in premium extended stay hotels. Think your Homewood Suites or your Residence Inns. Those are two of the biggest brands in its portfolio. Over that period of time I was talking about, where my investment in it grew over time, it had a strong track record of growing its revenues and its earnings, which are funds from operations in the real estate industry. And this allowed it to increase its dividend over time as well. In fact, it carried a healthy dividend yield of 6 to 7%, which was quite high during that time period of the 2010s, given our low interest rate environment. Now with COVID, it really adversely impacted the company in the late Q1, early Q2 of 2020 timeframe. So almost overnight, its business evaporated. They were forced to terminate staff. They cut the dividend. And they had to start tapping their lines of credit or accessing their lines of credit and borrowing to survive. So just like a lot of other small businesses out there, and this is a sort of $300 to $400 million market cap company, just like a lot of companies of a similar size, they really got into survival mode during this time period. As we look at their stock price, you can see that the company typically traded in a range of sort of the high teens, even got as high as it looks like, well over $20 a share at one point in time. But you can see that the market, people got really bearish on this stock in the Q1 to Q2 2020 timeframe. In fact, it got below $5 at one point, and there were a lot of questions about whether or not Chatham was going to survive. Okay. So at this point, I had to make a decision. Obviously that was a really negative thing for my investment account, but I had to say to myself, am I gonna keep holding this stock? Because guess what, if it goes bankrupt, I'd rather not get $0 per share. I might be better off selling for, $4 or $5 per share. But I had to take a step back and be objective about the situation. Now, usually the things that I'd be looking at, their earnings over time, their revenue performance, or their dividend yield, those things became meaningless, as they did for many other stocks. So when earnings go negative, a measure that's the equivalent of a price to earnings ratio in the real estate investment trust industry becomes meaningless. Same goes with the dividend yield. When the dividend yield goes to zero, there's nothing there. And so that was a traditional measure I had looked at, but the dividend wasn't being paid out anymore. So I needed to be creative to come up with some measure to answer the question as to whether or not the company was going to survive the pandemic. Using publicly available information, here's what I did. Now, it may look very simple what is listed out on this slide, but I can tell you that there were a lot of calculations I had to do to get to these measures that do look relatively simple on the page now. But right around the end of Q2, so using the Q2 quarterly report as well as their annual report for the year ended December 31st, 2019, I was able to come up with a few important pieces of information. So first off, I looked at the company's liquidity position. So in this case, I looked at the cash they had on hand in Q2, and I really dug into the level of borrowing that was available under their lines of credit, which importantly, they were still able to access because they had made some arrangements with their bank to do so. Okay, and what I came up with there was that they had $160 million of liquidity available to them. So that was number one. Number two, I looked at, well, how much cash are they losing per month? This really required me to parse through their cash flow statement. But what I came up with eventually, and actually a company report a little bit later confirmed that I was pretty close with my number, was that they were losing about $4 million per month. So historically, they had delivered some really nice returns and increasing income. They had now gone to a place where they were losing $4 million of cash per month, not their total loss, because their total loss would include things like depreciation. But in this case, they were losing $4 million of cash per month. When I put those two things together, what I was able to ascertain was that they could survive for about 40 months after all those drastic cuts that they made. They could survive for about 40 months. And so because of that long period of time, because of the solid management team that the company had, I decided that said, they weren't going to be going bankrupt anytime soon, and I decided to hold my stock. So let's take a look at what happened in the market. So what you can see here is that for quite a while, really through November of last year, they were trading at a pretty low level. But I think investors got more and more switched on to what I was seeing, which is that the company was going to make it through the pandemic. They may not be the same company, and we'll talk about that in a minute. However, it did seem likely that they would make it out of the pandemic as a viable real estate investment trust. And you can see that the stock did start to gain momentum in the fourth quarter of 2020, and some of that momentum carried through to 2021, though it has been down a bit lately. And their business results have reflected the fact that they are turning a corner. So occupancy, which was very, very low for some period of time, is now above 70% for their company. So you can see that travel is coming back, and that is reflected in the stock. We're no longer at doomsday type levels. So as we approach 2022, and this is for Chatham as well as for other companies, we really need to take into consideration the full impact of the pandemic as companies come out, and we're doing our analysis to assess what the impact was from a financial standpoint to companies that we invest in. So these are some of the things that I'm looking at. First off, for Chatham, and again, for other smaller companies that had to take extraordinary measures, what was the new financing that the company had to bring on? Did they issue common stock? That was certainly the case for some companies. Did they have some preferred stock that they had to issue? And what were the debt levels that they took on? In Chatham's case, it issued preferred stock, which is going to have a dividend that's going to be a drain on their cash in the future. But they also had to take on a lot of new debt, which is going to, drive some interest expense. Okay, so it's not going to be the same company emerging from the pandemic as it relates to their capital structure. So that's something you need to understand for companies you're thinking about investing in. The next thing is, did the company have to sell any assets or divisions? Now, in Chatham's case, they did have to sell one of their really, really, really valuable hotels down in San Diego, a Residence Inn in Mission Valley. One out of their 60 hotels is not the end of the world, but it is good to be mindful of any major asset sales that the company had, because that will decrease future earnings potential for the company. Finally, and I think most basically, I'm looking right now at companies that were impacted by the pandemic and saying, how do their revenue levels that are either going to be delivered in 2021 or that are projected for 2022, how do those compare to the pre-pandemic levels of 2019? It's just good context for me to understand where the company is relative to when things were normal just a few years ago. So in conclusion, here are my key messages. First off, when traditional measures become non-applicable, when they're meaningless, use judgment and creativity to come up with new metrics, okay? Ask yourselves questions. What do you want to know about the company? And, dig into their financial statements to find those metrics and also to develop your own unique insights about the investment opportunity. The final thing, and I said it on that prior slide, but I'll say it again, you really need to understand the full impact of the pandemic to your company. The stock today may be similar to where the stock was in 2019, okay? You may have been trading at $20 a share in 2019 and you're back at similar levels today with the increase in the markets that we've seen. However, it is important to understand things like the debt that's been taken on, the earnings potential of the company, because when you look under the hood, it could very well mean that even though the stock's at about the same price, there are certain headwinds for your investment going forward. So that's my talk for today. Feel free to email me if you have any questions or comments, or if you just want to discuss any of that a little bit further one-on-one. Thanks for watching today, and I'll look forward to meeting you in the future.